Hi everyone, this is 2026 Mentorship Program Lecture 22. In this lecture, I will be doing a weekly top-down analysis. First, I'm going to discuss what price did last week, and at the same time, I'll be explaining to you guys what we are anticipating going in this week. On the weekly time frame on the dollar index, last week I told you guys that I'm anticipating higher prices, and the drawn liquidity is for price to run the previous week high. That if there's going to be a continuation, the first drawn liquidity should be the previous week high. And at the same time, we should look at price trading to the buy side liquidity. So last week, price used the weekly fair value gap as an inversion fair value gap. You can see how price retraced to the weekly fair value gap, used it as a support, traded higher, took out previous week high, traded higher, took out the buy side liquidity. On the daily time frame, looking at this price action, which I told you guys that focus on the daily time frame is going to give you the key timing moment on what price will be doing last week, which is what I talked about, that the drawn liquidity I'm actually looking at is the daily fair value gap. Now, on Tuesday, price did not retrace the daily fair value gap on the dollar index, but on Hero USD, there was a retracement to a daily fair value gap, which there was an SMT in price. There was a diversion in price between both currency if you were to compare it, which we know that the Hero USD and the dollar index are the most similar pairs that trade on an inverse correlation. So if you were to look at both currency in identifying when there's a high probability in price, most cases you find that there's this diversion in both currencies where there's a point of interest that the dollar index haven't traded to, all the dollar index have traded to. And when you look at Euro USD, price haven't traded to that point of interest, or price have traded to that point of interest. There's going to be moments like that where there's going to be a diversion between both currency. Now, crossing those diversions to give you a trend, trading to that direction, in most cases, I don't have enough data on that specific time to tell you guys that you should focus on this diversion more than these diversions. It's something that you need to study on your own, but I'm going to talk about how diversions do work. Seeing that price did not retrace the daily fair value gap on the dollar index, price took out Thursday's low, created a swing low after the close on Tuesday's candle. After the close on Tuesday's candle, linked to the swing low, on Hero USD, price already respected the daily fair value gap, and the next drawn liquidity is to anticipate higher prices to run Monday's high. That led to the continuation in running out Monday's high. The 4-hour time frame, you can see the shift in structure on the 4-hour time frame. Took out the swing high, retracement, or block, continuation, a retracement on Thursday, trading back into the open range gap. Now you need to study that on your own. Remember, I'm not marking out all the points of interest to use as a study case. I'm only marking out the necessary ones to explain what price did on every specific week. Remember, you need to do your own personal study, not depending on my own review or what I did throughout the week. Make sure you do your own personal study, because looking at this price action on how price filled in the open range gap before expanding to run the previous week high and at the same time run Monday's high. Do your own personal study. Look at it from a daily perspective if you were to anticipate higher prices in price using it as a support to trade higher to run the previous week high. Price took at the previous week high, retracement is support, traded higher, On Friday, retracement to a 4-hour fair value gap. Use the 4-hour fair value gap as a support in trading higher before the run on the buy side liquidity. On the 1-hour time frame, study how the 1 hour did the shift in structure from Euro USD, which I already posted about it in the Telegram group, telling you guys that you guys to study on how price did the shift in structure. The reason is that I want you guys to understand a shift in structure on a Tuesday after running out Monday's high or Monday's low, which in this week, after the run on Monday's low, on Tuesday, price did the shift in structure, giving out the setup within the range of Tuesdays and Wednesday setup. If you have gone through the 2025 mentorship program, you know that I talked about the Tuesday and Wednesday setup. Here is a good example of a Tuesday and Wednesday setup. A retracement to a 1 hour fair value gap, which should have been your entry in anticipating higher prices, and your drawn liquidity should be Monday's high. And you can see how price traded in running out Monday's high. So moving to Euro USD from the weekly time frame. Now they're inverse correlated, which means I will be anticipating lower prices on Monday. And you can see how price traded through the previous week low, took out the sell side liquidity. Now during this retracement, price did not retrace to a weekly fair value gap, but looking at it from a daily perspective, you can see the price did the retracement to a daily fair value gap. You can see the retracement to the daily fair value gap, anticipating lower prices. If you draw on liquidity, Monday's low, if there's going to be a continuation trading lower. Because I told you guys that the time frame for you to focus on should be the daily time frame, because it's going to give you the timing on when price will be expanding lower. Which Monday took out the swing low, so let's call this sell side liquidity. Monday took out previous week high, but did a retracement back to the range, and looking at this swing high to swing low, it is going to be a retracement trading lower. Price will be using the 4 hour, sorry, this should be the daily fair value gap. Price should be using the daily fair value gap as a resistance. So the SMT is there. On Euro USD, price retraced the daily fair value gap, and on the dollar index, price did not retrace to the fair value gap. So there was an SMT between both currency, and you can see the retracement trading lower to run the sell side liquidity. On the 1 hour time frame, you can see the shift in structure. After price trade above the mid-range, because of the increment level of the daily fair value gap, shift in structure, retracement, 1 hour fair value gap. This should have been your entry if you were to anticipate lower prices to run the sell side liquidity. Your entry at the 1 hour fair value gap, and study on how price delivered trading lower to run the sell side liquidity. Study it on a daily perspective, and it's a good example to apply the day trading plan. Study on how price delivered, do a back testing using the day trading plan, and on the specific time frame I explained on the lecture, I talked about how to day trade, and I explained the day trading plan. Kept trading lower. There was a week higher. We're expecting the other block. We expected the other block to trade higher in running out the sell side liquidity. On Friday, after price took out the sell side liquidity, There was a retracement during the New York section, which was a day trading trade using a day trading plan, got me in anticipating lower prices to run the swing low, which was London's low, and price traded lower, took out London's low. On the weekly time frame on GBP USD, now we're still anticipating the same bias on GBP USD because I'm using the correlation from the dollar index as my general bias on where I'm anticipating the three major currency that I'm actually trading on, which is Euro USD, GBP USD, and USD JPY. So in GBP USD, I was still anticipating lower prices to run the previous week low, and you can see how price delivered in running out the low. Looking at it from a daily perspective, which was the major time frame I told you guys to look at, price were expected the other block. That was the idea in anticipating lower prices. Here's the other block. From the swing high to the swing low, a retracement to the other block led to the retracement trading lower. And this was a classic weekly delivery in a scenario that Tuesday takes out Monday's high, traded and closed within the range of Monday's range. The next drawn liquidity should be Monday's low. At the same time, we still have the previous week low as our overall draw on liquidity. On the 1 hour time frame, you can see the shift in structure on Tuesday. You can see the similar trade. So make sure that when taking a trade on these currencies, make sure you take account of the correlation so that you can learn how to manage your risks. Because if you were to take a loss, you'll be taking a loss on two trades at the same idea. Now I went through the same mistakes myself, trading correlating pairs, not taking account of if I were to be stopped out on one currency, I will be stopped out on both currency. So you need to manage your risks properly because if this trade were to trade against the idea in trading lower, I will be stopped out on Euro USD and at the same time I will be stopped out on GBP USD. So learn how to manage your risks correctly, knowing that if the trade were to trade against you on one single trade idea, it should go against your probability edge in trading the currency because you need a more higher win rate to make a single profit in trading this idea. So it's either you manage your risks correctly or you stick to one currency. Which, if you are a beginner and you're very new to my own personal trading style on how I'm actually explaining, and you're trying to develop a good trading plan, you stick to one currency pair that is correlated to the dollar index, which you can pick from the three currency. You can pick from Euro USD, GBP USD, and USD JPY. Stick to that one currency. Make sure you understand your win rate, understand your R, your reward to risk ratio, understand the trade plan correctly, already know how to execute it correctly. You're good at executing that trade plan. Then you can add one currency to see the changes in your trade setups. Now, it's going to be slow trading the weekly expansion, trading only one currency. But at the same time, it doesn't stop you in learning how to day trade if you have the time. Learning how to day trade using a day trading plan, you can easily day trade if you understand how to do it correctly. But study on how GBP USD traded lower. I'm leaving this lecture for you guys to use as a study case. I'm only giving you guys the key references to what led to the retracement trading lower in running out the previous week low. But the inner part in the day trading plan is for you guys to go in and do the back testing, which I normally post this lecture early before the opening of the weekly candle. So before the weekly candle, make sure you have gone through the back testing. And if you were to take advantage of any setup, knowing that you are anticipating lower prices to run the previous week low, I will be expecting you guys to give a review in the Telegram group, you're going to see a simple text review, an image identifying the setup, the trade setup, and a simple text explaining on how you got involved in the trade. That will show that you guys are actually going through the lectures and doing the simple text I normally add in the lectures for you guys to go through. On the weekly time frame on USD JPY, looking at this trade, running out the buy side liquidity. Remember, I'm using the dollar index as a key directional bias to the other currency, which I told you guys that if you have been on the lecture and you have been following me for years, you know that I specialize on the dollar index. That is my major currency. So I use the bias of the dollar index to trade on other currency pair, mostly because most brokers that I have access to only trade Euro USD, GBP USD, and USD JPY. I don't have direct access to trade the dollar index. And if I even have direct access, there's a high fee in trading this currency. So I learned how to trade currency pairs that are correlated, currency pair that has the dollar index as a base currency or as a quote currency, so that whenever the dollar index has a possibility of having a strength in price, then I will be anticipating a bias that is well correlated to that idea. So on USD JPY, I was anticipating higher prices on the dollar index, which I told you guys that my draw on liquidity is to run the buy side liquidity. At the same time, I'm paying attention to the previous week high and looking for a possible continuation in running out the buy side liquidity. Looking at the weekly time frame, you can see how price retraced to the other block. Here's another block candle after the run on the swing high. Price respected the other block, period higher, took out the buy side liquidity. From a daily perspective, here's the other block. On Tuesday, price created a swing high after respecting the other block. After creating a swing high, you're anticipating higher prices to trade higher to run the buy side liquidity. Study on the individual days on how price took out Monday's low, traded back to the range. Wednesday, traded higher. Tuesday, traded higher. Friday, traded higher. Study on how price delivered in running out the buy side liquidity. On the 1 hour time frame, after the Tuesday shift in structure, leading to a swing high, we're expecting the weekly order block. Here's a 1 hour fair value gap which price did not retrace to. It just after Wednesday taking out this high, taking out Tuesday's high, leading to the trade entry, which would have been your trade entry if you were to anticipate higher prices and price trading higher, which I normally show you guys the weekly expansion using the 1 hour as an entry because I want you guys to start your study from the simple entry logic using the 1 hour as an entry and trying to catch the weekly expansion. Price respected it, traded higher, took out the buy side liquidity. So you can see that I left a little bit of a blank space in this lecture because I want you guys to study more, spend more time studying more. I don't want you guys to depend on my own personal review or trade idea on every individual week. But I'll try my best to give you guys what I think is more necessary in developing and to help you guys through your learning process, which is explaining the basic bias. What are the key areas for you to use as a study case? The key areas for you to use as a study case is how price took out Monday's high, spend the remaining week trading to Monday's low. Monday there was an expansion trading higher. Tuesday reversed Wednesday, Thursday, and Friday traded to the opposite direction of on Monday. That is a classic weekly profile, a classic weekly delivery. So I want you guys to study on that idea, look at it from the USD JPY perspective, look at it from GBP USD perspective, look at it from Euro USD perspective, and look at it from the dollar index perspective. This is one of the most classic weekly delivery that I've been talking about, a classic power of three weekly delivery that I've been talking about, and it's a classic weekly delivery that if you were to study on it and learn how it works, you can easily understand weekly delivery if you can understand this week from the very tip on how price delivered. Which I told you guys that this week is a well delivered week on the bias that I have in mind, and using a classic power of three. And I explained the power of three, telling you guys that Monday was the consolidation, Tuesday was the manipulation, Wednesday, Thursday, and Friday was the distribution to the opposite direction. So study on it, and I expect feedback on the Telegram group. So that is it for this lecture. See you guys in the next lecture.